Islamic finance is a financial system that operates according to Islamic law, or also known as Sharia. In other words, the concept of Islamic finance can be referred to the investments or financial transactions that are permissible under Sharia and become increasingly significant in many Muslim countries and of course Malaysia. Since the 1970s, Malaysia has constructed a detailed plan to demonstrably develop Islamic finance into a full-fledged dual banking system by 2020. Fortunately, the enactment of the Islamic Banking Act of 1983 enabled the founding of the first Islamic bank in Malaysia. As of year-end 2020, the penetration rate of Malaysia Islamic finance has grown steadily over the years and possibility achieve the central bank target of 14% share of total financing, notwithstanding the disruption from the COVID-19 pandemic. Since Islamic finance is based on several restrictions and principles that do not exist in conventional banking, special types of financial arrangements were developed such as takaful, wakaf, while sukuk will be our main topic. Since Malaysia, the world's largest sukuk issuer and the country first ranked in 2019 for Islamic funds asset under excellent management with 34% of the global share.
Assalamualaikum, I am Jumriana Amri. So now I will proceed to the definitions of sukuk. So what is sukuk? Sukuk is actually the root of the English word for check. Sukuk are bonds that have been created to meet a demand for assets that comply with Sharia or Islamic law. Sukuk are securitized assets of business. The company sells the certificates to the investor who then rent it back to the company for a predetermined rental fee. The company promises to buy back the bonds at a future date at par value. Sukuks must be able to link the returns and cash flow of the financing to the asset purchase or the returns generated from an asset purchase. This is because trading in debt is prohibited under Sharia. As such, financing must only be raised for identifiable assets. Sharia does not permit the charging or paying of interest. Sukuk are typically bought and held to maturity, and they are extremely illiquid. Moreover, sukuk security may have partial ownership of a property built by the investment company and held in a special purpose vehicle so that sukuk holders can collect the property profit as rent, which is allowed under Islamic law. However, most sukuk are asset-based rather than asset-backed, means that their assets are not truly owned by their special purpose vehicle and their holders have recourse to the originator if there is a shortfall in payments.
Sukuk muharabah is a profit-sharing contract between an investor and the issuer. All profits in the venture will be shared based on the pre-agreed profit-sharing ratio. However, in the case of loss, all will be borne by the investor unless it was due to negligence or mismanagement of the venture, where the loss will then be borne by the issuer. The investor will supply the entrepreneur with funds for his business venture. In return, the investor will get a return on the fund he puts in based on a profit-sharing ratio. The main principle in a sukuk muharabah is the investors are dormant business partners who do not participate in the management of the underlying asset, business or project. The party who utilize the funds on the other hand is the working partner. However, sukuk muharabah should not contain a guarantee from the issuer of the capital or a fixed profit or a profit based on any percentage of capital. Sukuk muharabah, partnership between two or more parties to finance the business venture. The profit for the venture will then be distributed based on a pre-agreed profit-sharing ratio. However, losses are shared based on a basis of capital contribution. The Musharaka contract supports a joint business venture. All parties contribute capital either in cash or in kind for the purpose of financing a project or business venture. The process begins with an issuer signing a Musharaka contract. A Musharaka contract is a contract between partners, whether the contract is between the issuer and Sukuk holders or a Musharaka contract among the Sukuk holders. The contract specifies a profit-sharing ratio and indicates that the obligor will contribute assets to the joint venture.
So for Sukuk Murabaham, in its simplest form, it refers to a constructed arrangement between an investor and an originator. The Sukuk holders buys an asset in order to supply it to the originator who has no capacity to purchase the asset directly. The holders then sells the asset to the issuer for the cost plus profit margin based at which the investor had purchased the asset plus a made out that both have agreed to upfront. SPV will be facilitated in transaction between the investor and the originator. It cannot be legally traded at the secondary market because Sharia is no permit trading in debts on a different basis. Next, Sukuk Ijara. Sukuk Ijara use the leasing contract as the basis for the returns paid to investors, who are the benefit from the lease render as well as sharing in the risk. For the contract, SPV will agree to purchase the certain asset in an amount equal to the principal amount. After that, SPV leases the asset back to the originator under a lease arrangement for a term that reflects the maturity of the Sukuk. Originator pays the render equal to the prior distribution amount payable under the Sukuk at that time to SPV. Lastly, SPV pays each prior distribution amount to the investor using the render it has received from originator. Last but not least, Sukuk Wakala. Generally, it is a contract in which a party authorizes another party to act on behalf of the former based on the agreed terms and conditions as long as he or she is alive. Same as before, SPV will facilitate the transaction between investor and agent. Besides that, agent uses his SPV to select and manage investment on behalf of the investor to ensure that the portfolio will generate the expected profit rate agreed by the principal. The investor will only receive the profit return agreed between both parties at the outset. Meanwhile, any extra profit return will be kept by the agent as a performance or an incentive fee. In addition, agent will not responsible to share the risk of loss since he is not held to be a partner in the agreement.
Hi everyone, I will present the compensation between Sukuk and the bond. Based on the information we gathered, there are a few aspects for compensation. The main difference between Sukuk and the bond is interest. Since Sharia prohibits leases with interest payment which is considered usurious and exploitative in nature. Trust, there is not any interest in trading. In other words, only the profit elements in sales, leases, or partnership contract for return into investor. Next, primary level relationship. Primary level of Sukuk will be in variety of contracts such as Sukuk Muharaba and other types of Sukuk that show previous slide but valid for use for loans. But primary level for bonds will be in loan. This is because their function which are Sukuk indicate ownership of asset, while bonds indicate a debt obligation. Next, evidence aspect for Sukuk. The evidence in debtness, ownership, and investment, followed by the Sharia principle, while for bond, the evidence in indebtedness, followed by the conventional principle with IOU, a document to pay debts and mature debts. Lastly, tradability in secondary market aspect. Sukuk depends on the nature of the unlikely asset. Global Sharia standard does not discounting but allows sales of tangible asset. So some intangible asset and interest in virtual. On the other hand, bond depends on the sales debt transaction because bonds aims to collect money for any investor when buy it. I will pass next presenter. Thank you.
Hi everyone, my name is Prem Kumar Ganesan. My metric number is S50429. For the current issue of Sukuk, the Securities Commission Malaysia expects for the country's 2020 corporate bonds and Sukuk issuance to be between RM90 billion and RM100 billion compared with RM132.82 billion in 2019. As the COVID-19 pandemic and the resultant disruption on businesses affected fundraising activities. According to the Securities Commission, some RM22.7 billion was raised through initial public offerings and issuance of corporate bonds and Sukuk. In the first quarter of 2020, corporate bonds and Sukuk accounted for 96.92% or RM22 billion of the total money raised. In conclusion, the Sharia principle on which it is based is fundamentally important and should ensure it is a safe and sensible finance option for both the company needing the finance as well as the Sukuk holder. Clearly, companies like Emirates have shown the way on how to make Sukuk one part of their finance portfolio. Thank you.